ethanol. Nothing new, but what's interesting with Brazil is that it's helping them to become self-sufficient when it comes to fuel. Can we talk about Brazil's ethanol being a model for the rest of the world?
Well, Brazil has got it easy in a way, as they've got the right climate and enough space to grow enough sugar cane for their ethanol. We would have to import it. You know, we've not got enough farming land to produce as much as we'd need. So we can't take that as a model, really, for Germany at least.
All right, so the Brazilians, they've got a special case there.
Correct.
There's another interesting commodity in high demand right now connected with this rush to build electric cars right now. I'm talking about lithium. Lithium is needed in all these batteries right now. Toyota saying it plans to begin mining for lithium in Argentina. Could one say that lithium is the gold of the 21st century?
Well, I don't know whether it's the gold, but it's certainly an investment into the future, because the car market will have to shift towards other fuels away from oil and things like that. So I think there's definitely a good idea to invest there.
So many weird names right now on the market. New elements, trace elements, dysprosium, neodymium. I mean, it's a challenge just to speak about, just to pronounce those right now. A lot of investors are parking their money in these elements, thinking they're going to make a killing one day. As an analyst, do you see a gold mine there?
Well, it's difficult to say, because that's not really on our radar screen, because it's such small markets, so you've got a very high volatility. Also, it's difficult to invest there. You'd really have to invest in a company that mines or produces or uses this stuff. So you can't really go to a stock exchange and say, OK, I want a future in any of these rather strange substances.
All right, so let the buyer beware. Ms. Schweikert, stay with us. We're going to be back to talk with you in just a couple of minutes. You know, you will have to dig a very long time if you want to find lithium here in Germany. But that is not the case for copper. In eastern Germany, plans are underway for a new mine that could hold more than 100 million tons of copper. We have this report from what could be a gold mine.
This region of eastern Germany has a long history of lignite mining. Hans-Dieter Schleuter has been working in the mining sector for 40 years. He's convinced that the ground here still has more treasures to yield. 180 million tons of copper slate, to be precise.
Going by the current prices on the global copper market, we're standing on around 7 or 8 billion euros worth of copper.
Schleuter's company, KSL, is a subsidiary of a Canadian mining company. The Canadians are planning to invest 700 million euros in a new mine here. This first means carrying out test drilling at prospective sites.
We've got a planned drilling depth of between 1,530 and 1,550 meters. The estimated total time to reach it is about 3 months.
And that's just for one drilling operation. But each one is crucial for determining where exactly the copper is located. The Canadian parent company wants to see faster progress, and Schleuter himself finds things are proceeding too slowly.
Upping the tempo doesn't mean disregarding safety precautions. It just means having everything run a bit quicker.
The region has a history of mining and drilling. Samples taken in the past are now stored at the Regional Geological Office and provide useful indicators for companies seeking to mine raw materials. Placed in one line, the archive samples would have a combined length of 160 kilometers. Thomas Höding knows every single sample. In the former East Germany, the authorities had plans to mine the copper.
The copper slate deposits were discovered between the 1950s and 1970s, and the government was planning to mine them at a later date. Eventually, in around 1980, the plans were abandoned due to a lack of investment funds.
The drilling samples show that Brandenburg is also rich in other minerals. Apart from copper, these are primarily iron ore, coal, uranium, and petroleum.
We have various samples of Brandenburg oil from different probes. The best-known field was around Velmitz. This is classic oil as people know it, dark brown and thick.
The charming little town of Spremberg is the temporary headquarters of KSL. With copper in greater demand than ever, Managing Director Hans-Dieter Schleuter is eager to get cracking.
The underground mining will involve various people, from the management down to the miners. We expect around 600 or 700 people working on the project in the medium term.
And the same number of jobs again will be created above ground. The copper slate is only visible in these display cabinets, but if all goes to plan, the metal ore will be mined nearby in under 2 years' time. The new jobs mean opposition to the project has been minimal, and unlike the region's open-cast lignite mines, the copper mine will not leave behind an unsightly crater.
All right, let's bring back in Christine Schweikert. She's a commodities analyst with the BHF Bank. Let's talk a little bit, Ms. Schweikert, about the development of the price for copper. We've seen a huge climb in the last year. We want to show our viewers here. I mean, we've gone from about, what was it, $4,000 per ton for copper. We're now under $8,000. We've seen the price dip a little bit this year, but go back up. A lot of that had to do with the earthquake in Chile, right?
That's right. There was the earthquake in Chile with blackouts and a bit of production problems in the mines. But it's mainly China. It's mainly a China story. That's why copper rose so much last year. Chinese on a big buying spree. And the dip we saw this year was also due to the Chinese, everybody being worried about overheating, a reining in of loose monetary policy and a reduction of infrastructure and building projects.
Very briefly, you say overheating. Is there a chance right now that we could see inflation affecting the price of copper? People are betting on copper prices staying high for a long time. Is that a safe bet?
Well, I reckon that in the short term we might see a dip, but in the medium to long term, higher prices for copper. But it's not an inflation problem. Inflation is an entirely different thing, and that's related to monetary policy, so I don't think you should connect the two.
All right, we'll keep the two disconnected.
Okay.
Ms. Schweikert, as always, thanks for talking with us.